Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock analysis on DIDI, ticker symbol DIDI. Stick around, this one's going to be exciting. So for today's agenda, I'm going to give a business description that'll include how DIDI makes money, how their corporation is structured, as well as some of the history behind how they got to where they are today. We're going to look at the fundamentals. This will include revenue, net income. We'll look at the balance sheet, among some other metrics as well. We'll look at their vision, how they plan to grow, and what future prospects, how they plan to get that growth. And then finally, I'm going to give my price target and final thoughts of DIDI as an investment. If you're new to my channel, please consider subscribing. I do videos on personal finance, investing, as well as stock analysis. If you like this type of content, please hit that thumbs up button. It helps me out with the algorithm. Now to DIDI. So at a very, very high level, if you're familiar with Uber or Lyft, DIDI is very similar to those countries. Their target market is really China. That's where they make most of their money. That's where they're based out of. I believe 98% of their revenues are coming out of the People's Republic of China. If you look at their two segments, if you will, China and international, again, most of their money is coming from China. So just keep that in mind as we go through the revenue. I'll touch base on that later on in the presentation, but I just want you to know that right off the bat. Now, under China, they have four segments: shared mobility, auto solutions, electric mobility, and other initiatives. As we break those out, the core of their business is shared mobility. So what is that shared mobility? So if you're familiar with other apps like Lyft or Uber, you're very familiar with this type of model. You have an app, you say where are you starting, where are you trying to go, you select how you want to get there. For right now, the main mode of transportation would be ride hailing, typically vehicles, and what that would look like. And there are other selections like bikes and other things, but that's not really where they're making most of their money right now. So what that looks like is very similar to an Uber. You have different models. You can go Uber Black, XL, whatever it is. You have carpooling as well. And you just select how you want to do it. You put that in, it sets you up with a driver. They show up, you get in, go to your location, and they drop you off. That is what they do right now as a business model. There's lots of things, and we'll talk about how they want to do in the future, but that's what they do right now, and that is the core of their business as of today. So DIDI doesn't have a very long history. They were founded in 2012. They had an investment from Tencent early on, about 6 months after, for $15 million. 3 years later, they merged with Kuaidi Dache, and about a year after that, they actually acquired Uber China, and they presently are rebranded to DIDI. So they definitely made a lot of moves within the first 4 years, being able to acquire Uber and Uber China. That was pretty impressive there. Having a strong backer in Tencent definitely helps. So that's basically some history. If you want to look at it, I would suggest you do some more research on the history as well. But that's as brief as I can get it. All right, so jumping into the fundamentals. First off, we have a revenue comparison, and I wanted to drop in Uber, Lyft, and DIDI and compare them, just so you have a reference point as to how big they are, how well they're doing as compared to two of their bigger rivals in North America. So if we look at DIDI, we can see that they're coming in at $21.6 billion, and they're definitely the largest of the three, almost doubling Uber's revenue in 2020 at $11.1 billion, and Lyft coming in third at 2.3, so almost 10 times what Lyft did. If we look at revenue growth, we can see that Uber went from 106% growth at the end of fiscal year 17 to fiscal year 2019 at 24. So pretty big drop there. Same thing you saw for Lyft, 208% down to 67%. Lyft is definitely growing at a higher rate than the other two. And then DIDI between 2018 and 2019 had a growth of about 14%. We don't have any more historical information for DIDI as there's nothing else released in the prospectus, but that's what we had. So if we looked at 2020, most of these companies, actually all the companies, had a decrease in revenue. That's because the transportation industry overall was hit fairly hard. And DIDI actually did a little bit better in terms of decrease in revenue. They came in at negative 8%, Lyft 34% negative, Uber 14% negative. The thing that's important to note here is the revenue growth, okay? You can see that DIDI is definitely larger in revenue, slower revenue growth. However, their overall number is big. So 14% of 23 billion is higher than 24% of $13 billion. All right, so we need to look at revenue a little bit more granular. So let's look at the latest quarter. So they brought in 42.1 billion RMB. This is not US dollars, keep that in mind. If we compare that to this time last year, March 31st of 2020, they brought in 20.4, so they doubled that from the the pandemic lows. But that's not an accurate quarter. That's not normal. So let's look at March 31st of 2019. They brought in 33.9 billion RMB. The thing I liked about that year is every single quarter they were increasing the revenue based off of the previous quarter. Now let's look at how they fared during 2020. They had a huge decrease here from 33 to 20, 37 to 31, 41 to 43. So they only had 2 quarters of negative growth, and then they were able to recover 6 months after the pandemic started, going from 41 billion RMB to 43, and then in the year-end quarter from 41.8 to 46.6. So again, everything's looking good here from a year-over-year basis. Even when we compare it to the 2019 numbers, everything's looking better than it was the year prior, almost a full recovery here. And so going forward, looks like the pandemic's over for this company. That's good to see. If you like this type of content, please hit that thumbs up button. It helps a lot with the algorithm. Now back to your content. All right, so move on over to net income. We'll cover this real briefly. So all 3 of these companies have been losing money. Uber going from negative 4 billion down to last year at 6.7, and the year prior at 8.5. Lyft at 688 million, up to 1.7 billion in 2020. DIDI's net income seemed to be trending in the downward until 2020. So they went from 2.2 billion in negative net income down to 1.6 billion in negative net income. So I think they're getting close to the cusp. We'll talk later about when I believe that profitability will be achieved. But just keep that in mind that net income currently is 0. They're not making any money on the bottom line. If we move over to the balance sheet, move my face over here just for a second. If we look at balance sheets, just right off the bat, I think DIDI has a very nice balance sheet. Looking at assets, total cash and short-term investments for Uber is 6.8. Long-term debt, 7.6. Total cash, short-term investments for Lyft at 2.2. Long-term debt for Lyft at 600 million, roughly. And DIDI coming in at about 7. Let's not go down to the pro forma adjusted. Let's actually do actual here. $3.5 billion in cash and cash equivalents, and only 290 million dollars, 290, not billions, we're talking millions here. So much smaller debt load when we compare that to Lyft, half of what Lyft is, and what is that? Shoot, 21 times less what Uber has on this long-term debt here. So that looks really good. Like to see that. Overall, the balance sheet looks fairly healthy for them. Overall, looks like financially a solid company. They just need to have a few more quarters, and I think they can turn a profit here. Let me know what you think about DIDI down below in the comments. Are you investing at IPO? Are you already invested? What do you think of the analysis? Anything? Let me know down in the comments. Now, back to the video. All right, so next up, I just want to talk about dilution just for a quick moment. If you were an existing shareholder prior to the IPO, which most people weren't, these were typically other companies or investment banks that invested. but there are other shareholders. So if you are investing during the IPO, just know that you're not the only one that owns them. And it's just not the IPO folks. There were existing shareholders before. In fact, as part of the ordinary shares, new investors are only 6.5% of what's out there. As a percentage of the total amount of invested money, they're 13% of that total pie. So just keep that in mind. Now, those existing shareholders that owned prior to the IPO are probably pretty happy because their average price they paid was around $24. IPO at the ordinary share is at $56. So they're making about double on average what they paid for their equity in the company. And per ADS, it's $6.20. And again, as you know, the IPO was at about $14. And right now, it's currently sitting at about $16. So if you were an existing shareholder before, you're very happy with this IPO, and the investment banks are doing exactly what they were hired to do, and that's to raise capital. Now, on the same thread of dilution, I like to think about shares outstanding. So we talked about that, but what does it look like in the future? Will they be issuing more shares? The answer is probably yes. And the reason why I say that is if we look at their funding, they've had 24 rounds of investing since 2012, about twice a year on average. And it seems like, they've pretty much held that pace in the last several years. So don't expect them to keep shares outstanding stagnant. They probably will be issuing shares. They'll probably be issuing new shares as well, just for incentive purposes for employees, things like that, as well as probably raise capital through equity, issuing new shares. So just don't be surprised on that if you are a shareholder. Just looking at their history, I wouldn't be surprised. Hey, if you're still here and you haven't hit that like button, please do that. It helps me out a lot. Hit that thumbs up button, helps me out so much. Thanks so much for watching. Back to the video. All right, so one of the biggest problems I found while looking at the prospectus was the discrepancy I found between page 93 and page 142. And it's not a huge problem, it's just an issue that I think people need to be aware of it. So the ADS is what the IPO price is of $14 a share. That converts 4 to 1 over into ordinary shares, which they had valued at $56. When you look at their valuation on page 142, you see that they value themselves on March 31st, 2021, about 3 months ago, at $47.71. So you can know that they're trading about $8 more per ordinary share, or about $2 more per ADS, higher than what they valued themselves at a couple months ago. It's about 17% premium as to what they valued themselves. So it's not, it could be possible that they've appreciated 17% in the last 3 months. Just keep that in mind. You just don't want people to miss that, how they value themselves. All right, so when does DIDI become profitable? If we looked at the net income, they've had negative net income since their inception. But in 2018 to 2020, it's decreased from about $2.2 billion in negative net income down to 1.6. We know this year is going to be better. Their first quarter of 2021 was higher than it was in the previous 2 year-over-year quarters. So that's positive there. I think we're going to go from around $20 billion in revenue US dollars to about $24-ish billion for 2021. So good growth there. And I think in the next, I think by 2023, we're going to have profitability at more of a stable rate. I think in the near term, they could have a few quarters where they have a positive net income followed by a negative net income followed by a positive. But I think overall, they should, in my opinion, have a positive net income for full year, fiscal year 2023. So that's about a year and a half from now. I know it's quite a ways off, but it's what I think will happen. All right, so the question I think of, what type of growth can we expect from DIDI in 2021? So if we take the March 31st, 2021 quarter, where they brought in 42.1 billion RMB, we extrapolate that out for the next 3 quarters. that gives us around 160 billion-ish RMB. And if we convert that over to US dollars, it comes in around 25-ish billion dollars. If we compare that to the 2019 year, which they brought in 23.6 billion US dollars, that indicates about a 9% growth, which is down from their 2019 growth of about 14%. But that's just considering that the growth is linear. If we look at their 2019 growth, you can see every single quarter they were growing quite considerably. So they went from the beginning of 2019 at 34 billion, and they ended the year at about 41 billion RMB. So there's definitely growth quarter over quarter here. So I don't think that their next 3 quarters of the year are going to be flat. I think they're going to have increased. It's going to be an increase there. So just pay attention to that. I think they're going to have growth over 10%. They should have double-digit growth for this year at least. And I think as long as they continue to have near double-digit growth for the next 3 years, they should have that profitability here pretty soon. Pretty solid growth company, especially off of the amount of revenue that they got right now. All right, so what is the vision for DIDI? So if we look off of their prospectus, they give this nice little chart here that kind of shows over time. So in 2012, they really said that basically just private cars. Now, where we are in 2020, 2021, 2%, they basically say they're only penetrated the market at 2% into shared mobility and 1% in electric vehicles. What they hope to do in the next 20 years is to increase that penetration to 24% in the shared mobility size and 29% on the electric vehicles. Now you can see that there are some dependencies here. If you look on the y-axis on the right, you'll see that electric vehicles, purpose-built electric vehicles, hybrid dispatch, autonomous driving, these things need to become more mature in order for it to reach that estimate in 2040 as per their estimates. But they have a roadmap, they know where they want to go, they know where they fit inside of their market. It seems like they have a nice clear vision. There's some things that are outside their control, like this autonomous driving, purpose-built electric vehicles. Unless they're planning on investing in those things directly, they are dependent upon those things coming to fruition. However, they do have a good vision of what that end goal looks like, and it ends with autonomous driving. So I think overall they have a good vision, and it's definitely a bright future for DIDI. All right, so as far as a price target for DIDI, I'm not really a big fan of giving price targets for companies that have negative net income, but since I promised I would do this, I will do it. I'm not going to give a 12-month price target because I just don't have anything that I can really go off here. But if a few things hold true, they're able to reach profitability by 2023. I estimate their revenues to be around $30 to $35 billion with net income, hopefully in the $5 billion range. If that is true, then I'm hoping, that $80 billion, if we do 5 times that, 20 times the net income, it would give you around $100 billion valuation, which is about, let's see, what is that? A 25% increase by 2023 from current prices. So that's what I would say is my price target. I didn't say per share value, but around $100 billion in 2023 if they're able to get that revenue target as well as the net income target. So we got to be mindful of those things as we look at their further earnings calls, make sure they're on track, make sure there's not any headwinds that are causing any issues in China. The normal things affect this, the normal things that affect all Chinese companies affect this one as well. So there's the political issues, it's not a US based company, so there's typically a lower premium compared to non-US companies. So you give Alibaba to Amazon, the multiples there are totally off. Like, look at Amazon and Alibaba, they're just two very similar companies. but the multiples that they drive is completely different. So if you look at Uber compared to DiDi, it's the same kind of thing. There's I think a higher multiple attributed to U.S. based companies, and that's just the way it is. Do I think that may change? I think it may. I can't promise anything because political issues they come and go with presidents, but as investors we have to make good decisions for our current portfolios as well as our long term. And so if you do think DiDi is a good play for the long term, I wouldn't argue with you. I think they have a good potential here if autonomous vehicles become a real thing. These folks, especially DiDi, where they're at, that's going to be huge, especially in China. They love shared mobility to begin with, and I think it's a great model, especially in China, because they have a lot of public transportation, and these kind of things are just, I think, build upon that infrastructure. Whereas in the U.S., we're combating not having a great public transportation system with having this private transportation that's kind of its own little silo. Do I think people are definitely acclimating to it, definitely picking it up, love using those services? Absolutely. So nothing bad about what's happening on the U.S. side. I just think it's definitely a better fit with the cultural China. I think it just makes more sense there, and people, there's definitely a lot more people there. So if other things hold true, this doesn't just apply to DiDi, but if the middle class continues to get richer there, it's just going to be able to drive revenue for any of these Chinese companies, and DiDi's not immune to that as well. So that's just going to be another good thing for DiDi. So hope that helps. Hope you enjoyed this stock analysis. If you haven't already, please consider subscribing. Also, hit that like button. It's your last chance. Also, thank you so much for watching. I really appreciate you taking the time to watch it to the end. Frank Finance, out.